If you look at the whole universe of junior stocks worldwide, maybe there's 3,000 of them, 2,500. 90% are valueless. They have no value whatsoever. But they had prices a year and a half ago. If you merged every junior company in the world into one company, Junior Explorco, that company would lose $2 billion in a bad year and $6 billion in a good year. So what do you pay for an industry that destroys $2 billion a year in capital? The right answer is nothing. That belies the fact that probably 10% of the issuers, so maybe 300 companies, generate such performance that they add legitimacy and luster to a sector which destroys $2 billion a year. This really truly is an amalgam of the good, the bad, and the ugly. So your job is to find the good. Mercifully for me, in the last 12 months, the prices of the good, the bad, and the ugly have declined without sort of reflecting the underlying characteristics of the company. So that 60 companies that I follow closely and 150 companies that I and or my former employer, Sprott, follow, have uniformly declined in price to the extent where I think that the risk-reward juxtaposition is attractive from my own point of view. Why did this happen? Well, in the first sense, as I say, the sector was valueless as a whole sector and was 12 months ago, I think, uniformly overpriced. That's all changed. For me, the price of risk relative to the opportunity as I see it is the whole equation. Understand that I'm a provider of capital. And even an old fat bald guy like me, Kai, can win the race if I'm the only guy who shows up to run. So while you as a younger person, as a trader, might want to see instant gratification that would come from flow of funds, an old check writer like me wants no competition in the sector. So for me, the flow of funds is one of the things, the lack of the flow of funds is one of the things that attracts me to the sector. Going back perhaps to the intent of the question, I believe that the American voter believes that the American economy is strong enough that the Fed can continue to allow interest rates to rise. I'll note at least that some of the fiscal policy that's being reported to Americans is a sham. The end of quantitative easing, the so-called taper, is not occurring. While the Fed is not as active in the Treasury market as they used to be, they're buying mortgage-backed securities. They're supporting the mortgage market with counterfeit currency. They aren't borrowing the money to do it, they're in fact printing it. Negative real interest rates, too, are obviously not a natural phenomenon. They're a construct of the Fed. But I believe that confidence in the economy is still strong enough that the Fed isn't going to have to back off allowing interest rates to rise. Note that interest rates are still, real interest rates, decidedly negative. The US 2-year and the US 10-year trading at about a 300 basis point yield in a currency that's declining by 900 basis points a year. The fact that we have confidence in the economy when the distortion between narrative and math is that aggressive is very impressive for me. Nonetheless, the market works the way the market does. I expect that the Fed in the near term will be able to continue with at least one, perhaps two more interest rate rises. A bigger question, Kai, is because we're all going to be here, or most of us are going to be here 5 years from now, what happens between now and then? If you look back over the last 40 years in history, Kai, for most of that time, the US 10-year Treasury has had a nominal real yield, which is to say that it has yielded in excess of the CPI stated rate of inflation. Were we to have reversion to mean, that would mean that the interest rate of the US 10-year Treasury would have to increase from its current 3 and change to 9 and change. Now, the impact of a real yield, the impact of a return to mean, would mean a quadrupling of the interest payable on debt, be it federal, state, and local debt, consumer debt, or corporate debt. That would have an interesting impact, I think, on equity markets. Going beyond that, for your American audience, I realize you have an international audience, but from an American audience, The US 30-year mortgage rate has yielded in excess of the US 10-year Treasury rate, which would mean that the US 30-year mortgage rate would increase from something with a 4 handle, a low 4 handle, to something with a mid-10 handle. Can you imagine the price of single-family homes in the United States if we had a 10.5% first mortgage? So I think ultimately what happens is that the Fed plays chicken with interest rates until the borrower, the voter, screams in pain. And if that happens and the Fed backs off the increase in interest rate, I think you'll see a response in the market that will take your head off.
Interesting point. And now is like a follow-up question to that as well. Like the Senate just passed the Inflation Reduction Act, which is like the name itself, we can argue all day long about it. It just doesn't make any freaking sense. But like you mentioned easing of pain. I just looked at it this morning, what's included in that, and it's supposed to cap Medicare costs and costs for medicine and stuff for consumers just to ease the pain a little bit. But $300 billion of that is going straight to pay down federal debt. So it just disappears again. Like, it doesn't make any sense. But $375 billion is supposed to be designated to fight climate crisis, right? I got to now circle back a little bit. A, like, what do you think of that package? And B, we're coming from the mining side. Do you think we'll have any benefit of that?
Answer to the last question's easy. No. I mean, there may be a handout to the nuclear industry, something like that. But let's go through this bill just for laughs. And let's preface it by that wonderful statement from H.L. Mencken. Elections are advanced auctions of stolen property. This was the lobbyists' enhancement bill of 2022. You'll notice that the potential benefits to taxpayers and shareholders are backloaded. They're projected to occur 8 or 10 years from now, yes. While the gifts, the subsidies to various industries, take place this year. I will gladly eat that hamburger today if I can pay you next Tuesday comes immediately. The Inflation Protection Act as a spending bill, title for a spending bill. I mean, you know, like what can I say? It actually reminds me of a different quote, this time from Ambrose Bierce, I think it is, in the Devil's Dictionary, who says, you can tell politics by looking at the origin of the word. Poly from the Greek for many, and tick from the English colloquial for small, blood-sucking insect. If you look at this bill, you will see the relative importance of various classifications of small, blood-sucking insects in Washington.